EURUSD continued its overall leg in towards the downside on Friday, taking out all of the lows and of course also breaking the overall 4-hour market structure right over here, meaning that at the moment the 4-hour swing high is positioned here and that this here is your 4-hour swing low, and that there is an alignment between both the daily and the 4-hour time frame due to the fact that the daily swing structure is from this high in towards this low. The market obviously retraced into premium pricing, and now with that internal 4-hour break of structure, this could confirm indeed that the next downward leg for EURUSD is going to be possible somewhere throughout the upcoming week. Now, last week I was mainly focusing on some more EURUSD upside, as ideally I wanted to see us take out the overall high here before really looking for any potential for the downside. But as soon as we on the lower time frame failed to put in any new higher highs, I understood, look, it is very likely that the market will continue with its overall direct order flow further in towards the lows. If you also looked at the 1-hour time frame last week, you could clearly see that there was no real bullish price action. The only piece of bullish price action that we got was the Monday price action, where we saw a break of structure here in towards the highs, swing low, swing high, and this internal liquidation. And I was then looking for the continuation. But what then happened is that we failed to put in a new higher high, and the market then continued pushing down lower. As we then could see, this liquidity low did absolutely nothing, and then we headed down lower towards the actual impulse liquidity. And if we look at the impulse liquidity, we look at this impulsing towards the highs. Within there, we had this first low, the second low, and then the third low. This first low obviously caused the most bullish price action that we saw on EURUSD throughout the last 2 weeks. And then what we saw was pretty much no reaction here, no bullish reaction here at all. So then you just let the thing ride down lower. It also doesn't really make sense to take any risk entries from, for example, this low here, due to the fact that the 4-hour structure was slightly unclear, consolidative, and the daily structure was, yes, swing bearish. So focusing here on the daily time frame, for now, the short bias holds the main overall confluence and the main focus for now. Looking at longs for now does not really make any sense due to the daily swing structure being bearish and the 4-hour swing structure being bearish as well. Looking at the dollar index, the dollar index is still relatively consolidative. We're now at the upper bound of the range that we've been in and stuck inside of since around the beginning of April, so for just over a month now. And we are ultimately going to be looking for, for now, just a breakout out of this range. That holds the main focus. We want to see that price develops into something of a trend. If we look at the higher time frame here on the dollar index, then you'll also see that we are relatively consolidative. It is important for the dollar index to start giving us some more clean moves on a higher time frame. Obviously, I'm not talking about a lower time frame. On the lower time frame, there's going to be your normal 1-hour impulses and pullbacks. But for myself, I would love to see us break out of this overall piece of price action we've been seeing here, where you see these big swings up, big swings down, swing up, big swing down, swing up, swing down, up. It is not easy to hold on to a position for, let's say, a very long period of time due to the swings being relatively short. But for now, it does seem more bullish than bearish as we have some upside momentum. And also, if you look at the weekly time frame, from a weekly perspective, it does have an area of demand situated over here. We have retraced into the 0.5 fib. And officially, this is a liquidity low on the weekly together with this low. And the reason why this is a liquidity low is because you see that push up, pull back, push up, pull back, push up. You see that this high comes above the high there to the left. And then what happens? We liquidate that low. And now we could still see some further upside price action. That held my preference. I was mainly focusing on short term towards this low. But now with the overall bullish price action that we've been seeing, we could definitely see some further upside for now. The reason that I'm talking about this is because of the fact that there's also some potential more downside for GPUSD. GPUSD, if you're not aware, has been relatively hit hard by pound news and mainly surrounding political instability in the UK. What we're looking for is some further downside. I'll be looking for some further shorts to take out the ascending lows here. The focus was on longs, as first of all, the daily swing structure was relatively clear, right? We had the swing low, we had the swing high, but now we need to see some bullish momentum come back. Ideally, we'll see something like this, and then if you want to see longs, then you'll see the structure shift to look for longs. But for now, with the situation in the UK and the pound are very, very weak. It is and does make more sense to focus a little bit more on the short side of things here. Ideally, a short from over here or from this liquidity high here on GBP USD for now to take out these weak lows that we have situated over here. Please do understand that still the pound, or let me put it this way, the dollar is not optimal for trading in my opinion just yet. The focus has definitely been on other pairs. For example, a much better expression of the overall pound downside has been Euro GBP. And that was also to see in last week's overall price action, where we had a very strong area of support here. And then on the lower time frame, being the 1 hour time frame, we had a picture perfect setup with the overall impulse in towards the highs, internal liquidation, and then from there we continue driving up higher. Now the same pretty much goes for your GBP this week. You could still look for longs on this, but GPUSD wise, we're gonna in the short term gonna be looking for some more downside, as there's no structure to work with for any potential longs, personally in my opinion, just yet. Going into AUD/USD and NZD/USD, we can see that AUD/USD sold off very aggressively, back down towards the lowest low here. This for me would only be a long if we can again break up above the overall 4-hour fractal structure, strongly start forming a clear trend, and then you could start looking for longs again. That could be an option for AUD/USD. NZD/USD, relatively similar. It is still swing bullish. The swing structure is from the low in towards the highs, and we have now taken out liquidity here. We would have to form some structure to get into some better longs, because there's no 4-hour fractal structure to work with, meaning there's no structure on individual candlesticks. So you would have to see this and then this. If I'm very honest, it is not looking optimal just yet, but that is obviously with the information I have now. If we can start forming, let's say, a trend, then there's so much upside for NZD/USD, but it just needs to form a, let's say, a base. I don't really like longing without a base. Yes, it is true that the most aggressive sell-offs can also lead to the most aggressive buys up. But if I look at EURUSD, EURUSD doesn't look optimal just yet. But we'll have to see. We'll have to see what, let's say, these first 2-3 days give. If we can see some more, let's say, room created between the overall low and where price is currently trading at, and we start forming some internal 1-hour structure, then I'll start focusing on longs. For shorts, there's nothing here for myself, as the overall market structure still remains bullish. But we'll have to wait for some internal structure to start forming and to confirm that it actually wants to head up higher. Moving on into USD CAD. USD CAD pushed up higher last week. Following what we were already explaining and expecting. For now, this is still a potential long opportunity. The structure is getting very, very messy in my opinion. You can clearly see that momentum is dying down a little bit, where previously we saw a strong impulse. Here we saw a strong impulse here as well. We saw a lot of momentum. It's becoming a little bit choppier, but we can still look for potential longs on this following the immediate momentum. There's nothing clear for myself on the 4-hour time frame to look for any shorts. So for now, just follow the direct momentum further in towards the highs. USD Swiss has taken out liquidity. This could be a potential short position in my opinion. Yes, it is contradictive, or let's say different to USD CAD, but structure is completely different between USD Swiss and USD CAD. So don't come for me. Swing structure is definitely bearish. We've taken out liquidity here at the high, and direct momentum is also in towards the downside. So I do like the 4-hour time frame here, where we do have the break structure down, internal liquidity now taken. So this could definitely be a short position and a good hedge against the other overall dollar pairs that you are trading, in my opinion. Is it a position I would take myself? No, just because I'm not a fan, again, of the dollar at the moment. And I would say that my focus would be on different pairs that are moving more cleanly at the moment, such as we saw, for example, last week on Euro GBP, AD Swiss, AD NZD, Euro AUD. USD JPY has continued to drive up higher. The dollar against the yen is still in control. The only thing that you have to understand is that at any point in time, can we again see an intervention? So we can see these massive wicks start to form. So do understand that if you do trade this pair, use a wide stop loss, because otherwise you're going to be getting stopped out by these wicks. But overall, further upside still remains, the overall focus until another intervention takes place. Then we, of course, have gold, and gold has been driving down lower last week, which makes sense from the overall analysis that we had, that this was the swing high and that this was the swing low. So the swing structure was bearish. We had talked about the internal liquidity being positioned over here, and then being positioned over here, and being positioned over here. We took out liquidity to the pip, and then we saw the overall next downside drive. So again, just swinging this sometimes does make the most amount of sense. 1 to 2 could have been hit. Now we are still focusing on further downside as long as the momentum remains the same. There's no longs for myself personally to be taken on this. So I would be looking at a continuation play once we take out some more liquidity. For now, liquidity is positioned here. So yeah, we would need to take out something around that level before looking for any further downside. So that's it for today, guys. Thank you again for tuning in. Wish you all a fantastic trading day. Let's see if we get some reaccumulation on your USD or GPUSD for some further shorts. And again, keep an eye on the other pairs as well, as those are potentially a little bit cleaner at the moment to trade. Thanks, and see you guys soon.